Subprime debt is back in the news. Could we be looking at the horizon of another financial crisis? As some of you may remember, the spark which lit off the financial crisis of 2008 was the continually rolling defaults of subprime mortgages that had been issued in over the previous years. Debt, for those of you who don't know, subprime loans is debt issued to people who are basically not good candidates for receiving a loan. They're people who are high risk, who have low credit scores, and who, in exchange for getting their loan, end up having to pay a somewhat higher rate of interest compared to what the going market rate is for interest. Now, the reason why banks or other lending institutions, and I'll get to that in a minute, would like to issue these subprime loans to risky people is because when interest rates are really low, as they have been for the last, really since starting in 87, they pretty much have been straight down since then, or 1980 they peaked. Interest rates have been going down, and so progressively banks, in order to make any real returns at all, end up having to take on riskier and riskier bets as they chase yields, because these subprime loans, even though they are risky, they do pay better for the banks than the normal healthy loans. This week, though, we're not hearing about subprime mortgages, but we're hearing about subprime auto loans going into default. Now, supposedly, as of right now, there are over 7 million people who are more than 90 days behind in making their car payments. And it would seem that as of right now, we're also experiencing a greater level of auto loan defaults than during the Great Recession. That means that there are more people who can't afford their car payment now than when we were in the recession. Now, if you look into it a little bit, it doesn't seem that bad, because most of these bad loans were made by non-bank lending institutions. If any of you have bought a car at a dealership recently, you may notice that a lot of them will try and finance you themselves with some in-house lending that they have, like GM or Honda, and all these companies have their own sort of lender under the GM moniker. And these lenders are not banks. So you would say, well, then how does it create a financial crisis? Because what happened with the last financial crisis was you had all these banks that were making bad loans, and then when people stopped paying, the banks couldn't, had no income, and they started going belly up and going bankrupt. Well, the way that this tracks back to the banks is that these non-bank financial institutions don't have to get their money from somewhere, and the way that they get their money is by borrowing them from banks. So the way that all these people making subprime auto loans make their money is they borrow money from the bank, and then they lend at a prime interest rate, and then they will lend that out to subprime candidates. And then their profit is the difference in the yield, because the subprime borrower is going to pay a higher rate than the prime borrower did at the bank. So banks are indirectly exposed to all of these subprime auto loans, because what happens is when the subprime auto loans are no longer performing, when people stop paying their car loan, the non-bank lenders start losing money, and then they can't pay back their loans to the banks. Another feature of this recent news that reminds me a lot of 2008 is we're now looking at something called auto loan-backed securities, which are basically the same thing as mortgage-backed securities. And what those were, they were packages of mortgages that were lumped together and then sold as a financial product. So, if you were someone who wanted to, say, buy fixed income, you could buy a share into a pool of mortgages, and then you could start making the money back on that as if you were the person who lent them the money. That's, sounds like a pretty good idea, but because of the market for mortgage-backed securities, banks were able to make really risky loans, because they knew, hey, if these loans ever go into default, we'll be able to sell the loans to someone who will package it into a mortgage-backed security, and it won't be on our balance sheet. So who cares if it goes if these people don't pay their loans in the future? And so what they started doing is making really risky loans, because they knew that they could sell these mortgages off and then not have any of the risk later. Well, it's the same thing people have been doing apparently with subprime auto loans. So we're in the same boat here. Non-bank lenders have been making subprime auto loans, and then they just package them into auto loan-backed securities and sell them off so they don't have to deal with them. So you may be asking, well, why did all this happen? If everyone, you would think that people would have learned their lesson after 2008 and not done the exact same thing, just in a different sector, switched from housing to auto loans. Why would all these lenders try and get themselves into this mess? And the simple answer is that after the bailouts, GM and Chrysler, all of a sudden they had this huge amount of debt that they had to pay back to the federal government at some point. And so in order to do that, the only way that GM and Chrysler have of paying that back is by selling more cars. And since credit was really cheap, thanks to Ben Bernanke and the Fed, for really this whole decade, credit's been extremely cheap. GM was able to, a lot more people were able to afford to buy cars at the lower rate. However, not everyone still could, because a lot of people at this point, even though interest rates were really cheap, everybody had bad credit because they lost their house and things and lost their job and and didn't want to take on a lot of debt, so they didn't build their credit back up. And so GM and Chrysler stepped in, and other automakers obviously, and said, you know what, that's fine. You guys, you don't have a credit score, we get it. We'll give you a loan anyway. And what this allowed the companies to do. This allowed the companies to sell a lot more cars than they otherwise would have if they were only selling it really to qualified buyers and people, at higher interest rates. And by being able to sell so many cars, they were able to pay off their bailouts. So really, I see that was probably the genesis of this whole issue, was the automakers wanting to pay back their bailouts and just trying to sell as many cars as they could for no matter the cost down the road. Now, if you think about it, it's a pretty good plan. You issue all these subprime auto loans through your non-bank in-house lending institution, if you're GM or Chrysler, and then you're able to pay off by selling all these cars. You're able to pay off your bailout by selling off all of these subprime auto loans that you've now issued into auto loan-backed securities, and then you get basically a cash payout for it. You pay off your bailout, and we're good until people stop paying on their loan, and then somebody ends up having to take the haircut there. So I'm not sure where this is going to go at this point. It really could go in any direction. This might have a big impact, it might not. But remember back in 2005, first Bernanke said, subprime's not a problem. People are not having trouble paying their houses. The housing market might be a little overheated, but that's fine. We're watching it. And then when subprime housing started coming apart, Bernanke famously said subprime is contained, and it wasn't, and it started spreading and everything. And what we have to watch is that there are the big banks have and there's an article in Zero Hedge, actually. I should link to it in the description, that goes over the exposure of different banks to these subprime auto loans, and it's pretty startling. So something to keep an eye on. Nothing's happening this week, but it's going to be a big deal eventually, I think.